Start this. Okay, good evening, everyone. I guess that's the local time. My name is Serge Berger. I want to just, first of all, do a quick audio check, make sure you can hear me and you can see the screen. If you can hear the screen, excuse me, if you can hear me and you can see the screen, if you could quickly type in a plus into the chat box, that would be wonderful, just to make sure I'm not talking to myself. Very good. All right. Okay, folks. Thank you for that. So we're gonna get started, and what we're gonna do here is I was asked by Roboforex to present to you on U.S. stocks, how to trade U.S. stocks using Roboforex. They have a wonderful new platform, I should say. And the purpose of this, I believe it's a 16 series webinar that we're going to do. So 16 different webinars over the course of time. And we are going to be covering a lot of stuff. We are going to be covering things like introduction to stocks or U.S. stocks. We can talk about the best stocks to trade, technical analysis, a lot of different parts and aspects of what it takes to trade stocks. We're going to talk about swing trading strategies as well, various different trading strategies, and then towards the latter part of the webinar series, we're going to also be doing some real-time market analysis as well. So that's the game plan here, and I'm very excited to be here. I hope you are too. Now, I don't know what anyone's level of knowledge is in as far as stocks are concerned, and more specifically US stocks. So I'm going to be starting from a very basic level to give you as much perspective as possible so that we can slowly build this up together, and so that you can gain knowledge of the US stock market over the course of this 16 webinar series. And again, we're going to do this in a step-by-step way so that you can follow this and also have some time to practice in between when you watch the webinars. So for today, as the first and inaugural webinar, what we're going to do is we're going to talk about the US stock market introduction. This is the very first webinar, and we're going to make the case for trading US stocks. There are many stocks out there. Of course, you can trade stocks around the world, and I'm going to make the case today for why U.S. stocks is a good option to do as opposed to some less liquid markets out there. Before we even get to that, let me just quickly give you a word or two about myself. This is the website that Roboforex was kind enough to put together. But myself, I have been very fortunate in my career to have worked both on the buy and the sell side, so places like JPMorgan on Wall Street and things like that. And what that has allowed me is to sort of see how the U.S. stock market and other markets that I've traded, including bonds and various derivatives, how they work and how some of the very best traders and investors make money in the world. So what we are going to be doing in this webinar series is, like I said before, walking you through this step by step. And I believe there's a bit of a welcome video you can watch here as well. And then I believe the webinars, the upcoming webinars, will always be posted on the website there, as you can see right here. I think the address for the website, by the way, is stock.roboforex.com/webinars. All right, let's get right into the meat of the presentation. And then what I'll be doing here during the presentation is I'm going to be going back and forth between some slides that I created, that I prepared, and the Roboforex trading platform, which looks something like this. Okay, so we're going to be going back and forth between the presentation and the platform. For today is for the first presentation. We are most likely going to spend a lot of time on the presentation itself, on the slides, and then as we build upon this and we go through through the webinar series, what I'll be doing is I'll be focusing much more then on technical analysis and on teaching you guys how I trade the stock markets, the US stock market, and what to look for and all that kind of stuff on the platform. So without further ado, let's start and talk about some things. So I'm just going to make a case for the next few slides of why I think trading US stocks world anywhere. So it's not that it's the only stock market, but what differentiates the US stock market from a lot of other stock markets in the world is that really most people know at least a good amount of the companies. So for example, you know stocks like Apple and Facebook and McDonald's. These are brands that in a lot of parts of the world that we know and we use, right? So that in and of itself makes it easier to trade US stocks as opposed to some other markets where you may not be aware of the companies. Now, of course, the US stock market consists of a large amount of stocks, and there are going to be many stocks there that you are not familiar with either, but there will be a lot that you are familiar with, and that's again something that you can't say for every stock market out there. It's really quite specific to the US stock market. Also, the US stock market has a large amount of stocks that are fairly easy to understand. So we move on to the next slide, and that's also very important. So unlike trading currencies, where it doesn't really matter if you understand the underlying country so much, it's really a lot of it is technically driven. And of course, you can trade US stocks using technical analysis as well. We'll talk about that a little bit later in this first webinar, and then we're going to talk about it much more throughout the webinar series. But you can understand what a lot of these companies actually do that you are familiar with, right? So we know that Apple makes iPhones, Facebook is social media, and McDonald's is hamburgers, right? Very, very simple. Simply put, that's basically what happens. So a lot of other stock markets out there do have, plenty of good companies and liquidity, but a lot of those stocks tend to be somewhat difficult. So if I look at, for example, something like the Swiss stock market or the French stock market or even the UK stock market, there are lots of stocks that are like, industrial stocks that are quite a bit more difficult to understand, to comprehend, how they work than something like, McDonald's, which is selling hamburgers. It's not that difficult. Now, I may be oversimplifying McDonald's business model, but you can understand what I'm talking about here. So this kind of brings me to another point here, and I think it's really an important habit to get into when you trade stocks, and that's to make sure that when you trade stocks, we're focusing on U.S. stocks, that they are things that you can understand. Because again, in the U.S. stock market, you're going to come across companies that you don't know and you can't understand. But as long as you focus on the ones that you can understand, you're going to have an easier time, flowing in and out of because of that very nature. And this may not make sense to you just yet, but at some point over the course of the next of this webinar series, I am sure you'll start to see that there's a lot of reasons why we should be focusing on stocks that we can understand. A lot of times it's going to mean focusing on more consumer-oriented companies that we are using in our everyday life, or our everyday lives, I should say. And again, these three companies, just to name a couple, certainly qualify that. In terms of size, and this is obviously an important part of why the U.S. stock market is a great stock market to trade. and that's the size. If you look at the MSCI World Index, which is what I took a graph here. This is the country weights from all developed countries in the world. So this includes certain European countries, certain Asian countries, and the United States. And you can see that country weights in the MSCI World Index, the United States stock market makes up more than 60% at this very moment. That's followed next by Japan as a single country. And then, of course, you have the rest here, which is, divided up fairly evenly. So you can see that the US stock market alone within the developed world makes up well more than 50%, well more than half of the global stock market if you look at the developed market countries. So that kind of just tells you the size of it. And again, you look at something like the UK market, right, which is not a small market, but it's only 6% or 6.5% or so right now of this entire cake. So, again, just to kind of put this in context, Japan you can see is about 8-9%, and then Canada is a very small 3.7% or so. Okay, so that statistic alone really is a reason that if you are going to be interested in trading U.S. stocks, using the Roboforex platform that again I'll show to you guys in just a little bit, it makes a lot of sense to trade U.S. stocks just because of the statistics alone. Okay. Now let's talk about some more stuff. Before we get into more detail, transparency and accountability. Now, of course, there are going to be problems with certain companies every once in a while. That happens everywhere in the world, including in the U.S. stock market. But for the most part, many of the largest and most well-known companies and the most financially sound companies trade on U.S. stock exchanges. Okay, there's even companies that are actually not based in the United States that have their main stock listing in the United States. For example, a company that comes to mind is, I believe it's Michael Kors. That's actually, I think, a UK company. And Michael Kors has its main listing, as far as I'm concerned, on the U.S. stock market. So just to mention you a couple of, just give you an example or so. Now, also, the United States has very strict accounting standards that it forces upon its publicly traded companies, like a lot of do around the world, but they tend to be somewhat more stringent still than a lot of others. There's very strict rules and for earnings announcements and for calendar announcements. So this makes it very important. This is a very, very important point to use. So let's say that you are trading a currency, okay? There is no way of there are so many pieces of news that come out every single day that could move any given currency. It's very difficult to focus on every single one of these news bits. So, and it's kind of random. Of course, some major economic data globally does come in clear frequency, but there's many other data that you would have to focus on because of the global nature of the Forex market in 24 hours, which we'll talk about in a bit. But the calendars, the earnings calendar for US companies and for European companies as well, for that matter, that makes it very straightforward for you to be able to get into a rhythm of trading US stocks and when maybe not to be trading certain stocks or when to be trading certain stocks. There's both pros and cons that come with this. There's also strict oversight, both in terms of the exchanges and again from a regulatory perspective for corporations and publicly traded entities in the United States. So all of that, doesn't prevent, but it really reduces the amount of shenanigans, or I should call it issues you tend to have with U.S. publicly traded companies, at least for the most extent when you look at large cap and even mid cap companies. So that's another important aspect about trading U.S. stocks. Now, liquidity, and this really ties in very much with the chart that I showed you before on size. And again, these are just some of the companies here that we're talking about to trade in the US stocks. Obviously, just three of them actually. But you'll see that, for example, the New York Stock Exchange is by far the world's largest stock exchange. There are other stock exchanges, and I'll show you that on a slide in just a minute. But the New York Stock Exchange alone is by far the world's largest. There's 3 to 4 billion shares traded on the the New York Stock Exchange every single day. That is a lot of volume, and volume equals liquidity. And if you are a Forex trader, then you can certainly relate to the importance of liquidity and understand that liquid markets on average tend to be easier to trade than non-liquid markets. So liquidity is a very, very important aspect of what makes the US stock market very appealing for stock traders. So here's a couple of the exchanges in the United States. It's not just the New York Stock Exchange. There are others, of course. One of them, for example, is the NASDAQ Composite, or the NASDAQ Exchange, I should say. The NASDAQ is a virtual exchange. There's no physical. There is a physical location, and I'll talk to you about that in just 1 second. This in fact, here is the physical location in New York City in Times Square. But there's multiple exchanges, a lot of virtual ones. So it's not just the New York Stock Exchange. So what differentiates the New York Stock Exchange specifically from the NASDAQ, or I should say what differentiates the NASDAQ from the New York Stock Exchange, is really the amount of large cap technology stocks that we have listed on the NASDAQ. So, names like Facebook, names like Microsoft, and so on and so forth, and Apple, and all these names that are somewhat technology related, for the most part, they trade on the NASDAQ. But again, they're still US listed stocks. So I'm just trying to show you that there's multiple different exchanges, a lot of other smaller exchanges as well out there in the US that you can focus on. We will focus on this more in further webinars, but for now, just keep in mind there's multiple exchanges. It's not just the New York Stock Exchange, although the New York Stock Exchange is an important index. So this is a bit of a personal note here. I am frequently in New York City, and I actually do go to the NASDAQ market site when I go on television. For example, here I was on Canada's BNN television. Here you can see in the background is the NASDAQ Composite, which is again this right here. So the point is that not all the exchanges are physical. In fact, the New York Stock Exchange is really the only one of respectable size that's still left. A lot of them are virtual, and the NASDAQ market site is really just that. It's more of the reason they have the market site is really just for guys like me to go on television and talk about stocks, as opposed to there's no real actual trading going on there. So anyway, just a bit of a side note. Now, let me spend a little bit of time on this slide. This is really important to go through because a lot of you people are trading Forex or thinking, and maybe you've already started trading some stocks. Maybe you are already doing some stock trading, some US stocks. But one of the big problems, for the lack of a better term, that you have when you trade foreign exchange is the fact that the foreign exchange market really is a 24-hour market. And a lot of times what the problem with that is this availability. And a lot of people have this feeling that just because a market is open, that you have to do something. Can anyone relate in here by show of hands? Does that make sense to you? Have you ever fallen into this trap at like 2 in the morning or 5 in the morning? You feel like you have to do a trade just because you are bored, or just because the market is open, right? And that actually over time is a very bad thing to be available to happen to you, because just because the market is open or just because it's available doesn't mean you have to trade. You have to trade when there is good opportunity. Okay, so there's a really big difference in those two types of scenarios. So when we talk about the U.S. stock market, it has very specific hours which is open like all other stock exchanges, right? So this isn't just a U.S. phenomenon. This is all stock exchanges are open for specific hours. So the U.S. stock market is open from 9:30 in the morning, New York City time, or New York time, I should say, to 4 in the afternoon, New York time. Now that's about 3:30 Central European time in the afternoon to about 10 p.m. Central European time in Europe. I understand for certain parts of Russia and Asia, that of course is even later. But the point is, and I will show you guys this later on in this webinar series, you can actually trade the U.S. stock market while you are sleeping by setting orders ahead before the market even opens. Okay, or while you're sleeping, so it just kind of does what you need it to do. The market is open Monday through Friday, so it's closed Saturday and Sunday, which is how most things here in the United States work. Most things are closed, financially related, Mondays through Fridays. Okay. Now let's talk a little bit about volatility, and this also gets me to the point of comparing foreign exchange versus stocks, and in this case specifically U.S. stocks. Currency trading is all about volatility, and that's what attracts a lot of people to currencies, and that makes a lot of sense. But the volatility can get excessive, and the excessive volatility is what a lot of people find difficult in Forex over time. So what I like about stocks is that there is plenty of volatility, but there isn't too much volatility. Now, sometimes there is too much volatility, but that really is more of an exception than the rule. So here, for example, we are looking at the VIX, or the volatility index. This represents the implied volatility of the S&P 500 options. Another way of looking at this, and maybe a more simpler way, is just it represents volatility in the US stock market. And you can see we can actually map out this volatility very clearly using some instruments that are also tradable, by the way, on the Roboforex platform. Okay, that's this right here. I'll show you guys more about this here shortly. But you can see basically volatility tends not to be elevated too much. It is, usually trades in a certain range volatility, and when it does rally or spike higher, it usually does mean revert fairly quickly. Now, this doesn't mean that there's no volatility when it goes back down. It just means that the markets then become more orderly. Unlike some currency markets, which can remain disorderly, for lack of a better term, for an extended period of time. So again, in summary for this chart, that the big difference in terms of volatility, stocks versus currencies, is that currencies are a lot more volatile than stocks. And yes, volatility can be a good thing, but too much volatility can be detrimental to your success as a trader. And I find a lot of people find that to be fairly challenging in trading currencies. And so a lot of people that I teach and my clients, they ultimately do move to stocks, at least in part, because the volatility is more manageable. Again, that's just one of the reasons that I just showed you just a minute ago. Okay, now let's see. Let's keep moving along here, and let me bring up this concept of indices and exchange traded funds. Now, as you will see in a minute, yes, of course, we can trade stocks, U.S. stocks, and we can trade them on the Roboforex platform, all the big ones, all the important ones. But it's not just that. We can also trade some highly liquid and organized indices by way of exchange traded funds, or ETFs. So some of those symbol tickers are, for example, the SPY, which is an ETF representing the S&P 500, or for example, the Russell 2000, which is ticker symbol IWM. So the way I want you to think about this is that the S&P 500, sure, most of you, if not all of you, have heard of what the S&P 500 is. The S&P 500 is a large capitalization equity index here in the United States. And while you can't trade the index, you can trade futures on that, but also exchange traded funds, which is really what we were talking about. The S&P 500 is your large cap index, and then there are things called smaller capitalization stocks. We will talk about this more in future webinars. But for right now, just keep in mind that there's basically the S&P 500 among other large cap indices, like for example Jones Industrial Average. And then there are large cap, mid cap indices and small cap indices such as the Russell 2000. The Russell 2000 companies, the companies trading in the Russell 2000 or in the IWM ETF, let me quickly show you what that looks like. Those stocks tend to be US centric, okay? So let me quickly arrange something. All right. So here is the trading platform for Roboforex for trading stocks. And you can see that, for example, the SPY ETF this is what it looks like, right? Very nice and orderly exchange traded fund on US stocks. The IWM would be the Russell 2000 exchange traded fund. Okay, same thing here. Lots of liquidity. You can see the amount of liquidity is just incredible on these indices, and so there's tons of liquidity, not just in single name stocks. Also, if you want to trade exchange traded, and we'll talk about that a little bit more here in just a few minutes. Leverage. Let's talk a little bit about leverage and how that relates to US stocks and how maybe that compares versus what we tend to see in currencies. A lot of people are also drawn to trading currencies because of the large amount of leverage you can get. So you can make or lose a lot of money in currency trading by having a lot of leverage. Now again, that goes both ways. So to me personally, I don't like to trade with much leverage. So I like to trade, in fact, a lot of things I like to trade is without leverage. US stocks, as I said before, they are plenty volatile, but as a whole, they are not too volatile. And that's because there are so many different players or traders participating in that market. Lots of small players, lots of big players, lots of mid-sized players from around the world. So the players that are partaking in the U.S. stock market are making those stocks volatile enough, but not too volatile. Because if the market is too volatile, what happens is that you start stressing out, you start losing money, you start losing your process, and in a way you might even lose your mind. So, and we don't want that. So there's plenty of volume, and there is wonderful opportunities taking place in the U.S. stock market every single day of the week when the stock market is actually open. Sometimes in other asset classes like currencies, there is not always opportunity every single day, but in the U.S. stock market, because it's such a broadly diversified and big stock market with so much liquidity, there is always something that is happening, some trade you can do in a very high probability way. Okay, so this is important because, again, if we compare this to currencies, yes, currencies, if you want to get a lot of leverage, then currencies are attractive. But what a lot of people find over is that currencies, the leverage you get is actually a a two-edged sword in the sense that the leverage, as much as it can be good, it can also be very bad for you. So for that reason, I believe that if you're interested in trading something less leverage but with enough volatility, then it probably doesn't get any better than US listed stocks. Now, let's talk about a concept here, and this is us into the second part of today's presentation. Let's talk a little bit about sectors, okay? Now, when you look at the world of currencies, there is obviously a finite amount of currencies, and there's a lot of pairs, so there's plenty of stuff to do, but it's not really organized in a manner that the US stock market is, or stocks in general, but this particularly pertains to the US stock market. So the US stock market is essentially divided up by market capitalization, large cap, small cap, mid cap, like we said before. But what I want to talk about here in this slide is that US stocks are, more importantly in my opinion, divided up by different sectors and industry groups. And what that does is that allows you to have a very systematic approach to trading. It allows you to have a lot of overview of the markets, and ultimately that's the most important thing. So the way that I look at the US stock market is as follows. Let me go ahead a couple of slides, and then we're going to go back to the slide I just showed you. So the way that I like to look at the stock market, the US stock market, is I pick off being a hawk. It's a hawk is this bird. It's a bird of prey, okay? And imagine you are a hawk. You're flying high above the ground. You're flying over fields, and you're looking down. And what you're seeing is the stock market, okay? And because the stock market, well, the stock market is obviously a big mess every single day. Some stocks go up, some go down, some go sideways, some go in circles. No, I'm kidding. Obviously, they can't go in circles, but the point is, you're looking down at the stock market, and essentially, what you can look at the stock market in a very organized manner by sectors, by groups. There's many other ways you can segment the U.S. stock markets, and ultimately, of course, single name stocks. So that's a real beauty of the stock market, because you can really segment it that way. Now, let me get back to the exchange traded funds, and I see a question here by ABCXYZ Trader. And he's asking a very good question that really pertains to this slide here that I was just about to go through. So there are some very important sectors that you look at, or these are exchange traded funds for the S&P 500. And we will talk about this much more over the video series, over this webinar series, over the next, we have 15 more to go. But just to give you a bit of a glimpse, the exchange traded funds here that we're looking at are essentially making up the 10 sectors of the S&P 500. Now, these are 9 sectors, 9 ETFs that I made, because there is one sector that actually doesn't have its own ETF, or it's not worth doing, and that's the telecommunications sector. So for all intents and purposes, what you want to focus on first and foremost, if you want to break down the US stock market, in my opinion, is looking at the different sectors. So you have financials, technology, consumer staples, consumer discretionary stocks, utilities, healthcare, industrials, basic materials, and energy stocks. And these exchange traded funds, which, by the way, are all tradable on the platform. So all you have to do is go into the platform and type in the according exchange, the according, the according ticker symbol. For example, here is the symbol for the XLE energy sector ETF. right? That's this one here. So now let's get to the question here by ABCXYZ Trader. And he's asking, what is the lead lag in pairs? In other words, exchange traded funds on the stock share. It's really essentially what you're looking at is the exchange traded funds is made up of stocks. So the underlying stock is stocks that are in each one of these exchange traded funds are moving the exchange traded fund basically in real time. Okay, so for the most part, this is all taking place in real time, and this is a big difference between the U.S. stock market and a lot of other stock markets for exchange traded funds. The U.S. stock market is very, very, very liquid. Okay, so there's a lot of liquidity, for example, in European exchange traded funds as well, but nothing is as liquid as these U.S. listed ones. So there's really no real lead in time. When let's say Google, which is in the technology ETF in the XLK, when that stock makes a move, it's most likely going to move that ETF right away. So yes, exactly. So the XLF, or the XLK ETF, for example, is made up of various technology stocks, right? For example, in the XLK, we have things like Microsoft, things like Apple, things like Facebook. These are all stocks that are in this exchange traded fund. Now, of course, it's a fund, it's an index, if you will. So, it's not going to represent any single stock, but it's going to represent all those stocks in that index. Yeah. Okay. So, but for example, Apple is a really, really big part of that index. So when Apple goes up or down, it tends to move this index here, right? But that's just your starting point. Now you can trade exchange traded funds, and you can trade using the forex, the Roboforex platform that they have, which I think is very, very good. But that can be just your starting point. So once you understand, and maybe you look a little bit deeper into the XLK ETF, okay, which is again the sector ETF of the technology sector of the S&P 500, you can then look a little deeper and look at Apple stock, which of course is part of the technology sector of the S&P 500. Okay, so that's the way that I like to look at the market, is first by sectors, and then you can also dig deeper and look at various different groups. Like, for example, you can look at transportation stocks, you can look at retail stocks, you can look at semiconductor stocks, like Intel, for example. You can then go into the financial sector and go a little bit deeper and look at stocks, right? For like JPMorgan, like Wells Fargo, Citigroup, Bank of America. All these stocks that are made up, that are inside these exchange traded funds. All right, now let's talk about another really, really important point, and that's technical analysis. I'm assuming that a lot of you are using, at least in part, technical analysis when you trade currencies. And as much as technical analysis works and can work better or worse, depending on the environment in currencies, for US listed stocks, particularly your large and mid cap stocks and small cap stocks for that matter, technical analysis works very, very well. And again, part of the reason why it works so well is because of the great market liquidity and because of the diverse set of market participants. So it's not just a bunch of huge corporations or banks that are trading US stocks, or it's not just a few small players. For the most part, the large and mid cap and even the small cap stocks, at least the ones that are in the Russell 2000 to a good extent, they are being traded by a very diverse set of players, and that makes these stocks extremely lucrative to trade. So let me continue with this and just kind of talk a little bit more about technical analysis as a general theme, so you have a little bit of an idea here. Now again, technical analysis works if you have enough volatility, but not too much. And that's what I think a lot in currencies, is that volatility sometimes gets too much, and then technical analysis stops working. So what's important also for technical analysis to work is that you have orderly information flow. Okay, so that means that your information flow comes out at certain times of day, or certain parts of the year. You have earnings news coming out at certain parts of the year. You have economic data coming out. All these things really help U.S. stocks trade well technically. Okay, so it's not necessarily just one thing, but it's this amalgamation or this combination of things that makes U.S. stocks very, very well to trade. Like, for example, let me give you guys a couple of examples here. We're looking at, for example, here, this is the shares of Apple. Let me quickly go through here. And of course, Apple is a very large publicly traded company. Of course, you have a lot of players in this stock, a lot of orderly news flow. Apple, for example, you know exactly when they are going to announce a product. They always make that aware ahead of time. They always tell you when they're going to report earnings. They have strict accounting standards to go by. So all these things make it very, very straightforward from a risk management perspective to trade things, a stock like Apple. Okay. Now again, we're going to talk more about technical analysis over this entire 15-part video series. But for now, just be aware that U.S. stocks trade very, very well technically. If we, for example, look at the S&P 500, the SPY ETF, just to give you one little example, you can see how orderly this trades technically. Let me just give you a little bit of an example. So let's say we take a simple resistance line, and you can see how orderly the market trades, continuously does a good job at breaking out of consolidation phases. It holds well for Fibonacci retracements. It holds well with moving averages. All these things work very, very well using in U.S. stocks, which cannot be said for everything. There's a lot of commodities out there, and I think plenty of currencies that do not act so well for using technical analysis, because the information flow is very random, or it's 24 hours, or it's coming from sources that are not worth trusting, or the liquidity isn't there, right? So there's a lot of reason why U.S. stocks act well technically, and better so than many other asset classes out there, and in my opinion, the best in the universe of stocks. So that's the real basics of what I wanted to cover here today. I would love to take some more questions from you. Would like to be able to take your questions and kind of go through a little bit, deeper into what concerns you. Maybe you can also let us know what kind of content you would like us to cover going forward for the rest of this webinar series. But again, keep in mind, let me just summarize one more time why U.S. stocks are so good as compared to other stock markets and I think other asset classes. So again, number one really has to do with companies. Okay, you can understand a lot of the companies. You already know all the companies that trade there. Apple, Facebook, McDonald's, Google, Amazon.com. All these companies people have at least heard of before, and that cannot be said for a lot of other markets out there. The size, U.S. stock market is very, very big. It's more than 60% right now of the entire MSCI World Index of developed countries. So that's a very, very large market. Again, compare that to just, for example, the United Kingdom market. The UK market is only makes up about 7% of this entire pie. So the US stock market is very, very large. Transparency and accountability. Many of the largest and most well-known stocks, companies in the world, and the most financially sound companies trade in the United States, where we have strict accounting standards, strict rules, calendars for earnings announcements, and so on and so forth, and very strict oversight in general. Liquidity, we talked about the importance of liquidity. Again, liquidity is a byproduct of having a trustworthy market. 3 to 4 billion shares traded every single day, and sometimes more, I believe, on the New York Stock Exchange. So that's a lot of shares traded on just one stock exchange itself. There are multiple indices, multiple exchanges. The New York Stock Exchange composite just being New York Stock Exchange just being one of them. The Nasdaq composite being another. We can break the U.S. stock market hours down into very well-defined hours. The market is not open 24 hours a day. It is open from 9:30 New York City time to about 4 p.m. New York City time. Then we have volatility. Excuse me, let me quickly turn something off here. Volatility, again, the U.S. stock market is volatile, but not too volatile. In terms of indices and exchange-traded funds, it's not just stocks that you can trade. You can also trade exchange-traded funds. And if you look at the platform here that we use for Roboforex, you can see there's lots of ETFs you can trade. You can trade all the ETFs that are making up the sectors of the S&P 500, for example, a lot of subsector ETFs as well. So the Roboforex platform really offers everything you need to trade the US stock market. We'll talk about this much more going forward and talk about the technical analysis part of this. We will talk about some of the hot stocks to trade. Which kind of stocks should you focus on? These are all things we're going to be focusing on here going forward. In fact, I'm going to show you guys, I'm going to go through Friday's or the next chapter here in just a minute. We talked about leverage. Again, I don't think there's a lot of reason to gain extra leverage in the US stock market because it is an orderly market. It moves enough, but not too much. Important is that the US stock market is very nicely divided into multiple parts, divided by sectors, divided by industry groups. Each one of the major sectors has an exchange-traded fund associated with it that you can trade on the Roboforex platform. Again, it's great for technical analysis, which cannot be said for every market out there. U.S. stocks trade very, very well technically, and we will talk about that very soon in one of the next upcoming webinars. The way I like to look at the stock market, and this is again something that allows because of the way the stock market is structured, because of the amount of liquidity, the amount of players in it, the sheer size of it, you can look down at the stock market and break it down by sectors, groups, stocks, and even options if you like to do so. So there's an orderly process in which the market is divided, despite the fact that, of course, stocks go up and down every single day. All right. Now, what we're going to be talking about in the next webinar is we're going to go through the best stocks to trade in the US stock market. And when I say the best stocks to trade, I'm not giving you stock tips, or at least not yet. What we are talking about is which stocks should you focus on? What is the type of volume you want to focus on? When do you want to focus on certain stocks? When do you not want to focus on certain stocks? These are all things that are really, really important to understand and to give you more context as quickly as possible. I will show you guys which stocks to focus on, what market cap, all these kind of things in this next webinar. So technical analysis will be something we will be applying for a lot of the trading. Again, technical analysis is an integral part of what I do, of what I teach people, the way I manage money, the way I trade myself. And again, one of the great things and one of the requirements for using technical analysis to me is that you have a market that is both liquid, that is transparent, that is large enough in size, and one that has orderly news flow. And again, I'm repeating what I said before. The orderly news flow and the regulatory overview of the market and the diverse set of players, from hedge funds to single name, to retail traders, like I'm assuming a lot of you folks are, to institutional players from around the world that are dabbling and playing in this market in an orderly manner, or at least in an orderly manner in the sense that there's a defined opening hours. That is what makes U.S. stocks very, very attractive to trade. Again, I would love to take one or two more questions if you have any more questions, but I would quickly also show you, if you have not yet done so, the Roboforex platform is very, very straightforward to use. I believe they just came up with an updated version, which I'm using here. I'll be using this throughout the presentation over the next 15 or so webinars, and so I'm looking forward to showing you guys how this works. Again, if you have any suggestion of what we could look at in terms of things you want to learn, please go ahead and send us through the chat right now, or send an email to Roboforex so that we can cover what you need to know, what you want to know, and so that we can teach you how these markets work. Again, it's a very simple and straightforward platform in the sense that it's simple to use. It has all the features you need, in my opinion. Again, I've been a trader for nearly 20 years, so I think learning or trading the U.S. stock market using this platform could be very beneficial. There's watch lists you can build. There's one-click trading. There's a lot of technical analysis. It's all there as far as I'm concerned. So I hope this first webinar was helpful for all of you. Again, if you have feedback, we would love to hear it. In the meantime, thank you for listening today, and I wish you a great rest of your day.